here we are live, LeAnn Riley and Tim Johnson, multifamily investing scaling to 50 plus units. So I just want to tell you, I'm LeAnn Riley, broker, coach, and trainer of real estate investing made simple. And I lead the Encore investment team of realtors in the Twin Cities. And I built a multi-million-dollar portfolio in residential, multifamily, condo development, commercial, and vacation properties. So I know a thing or two, right? And I'm here with Tim Johnson. I'm going to introduce him in a moment. And here's the thing, this real estate investing club that you're attending here, we've been virtual even before COVID hit. And the reason is now you can join us in your jammies, right? And it's so much easier than trying to get somewhere at a certain time. So I'm really glad that I have this platform, and I love to provide free education on how to become a real estate investor. That's my passion. So I'm going to tell you about our guest today. It's Tim Johnson, and he is a true real estate entrepreneur. He really is. And he scaled his portfolio to over 54 units in just 5 years. Now, I don't hear very many people have that story, Tim. So I'm really excited to hear how you went from the one rental house all the way up to that. And I really love your story. You know, when we last talked about 3 weeks ago, he had 54 units, but I know something was for sale and something was in the works. We're going to find out. I didn't even call ahead. So you're going to be right here with me finding out what's up with Tim today as he's really growing and taking this to the next level. So first, I always start out, Tim, and I share, how did I meet our speaker? Because I really have people that I run into, and I love your story. So here's the thing, by coincidence, Tim and I were in a virtual conference together a couple months ago, the North Star Real Estate Investing Virtual Summit, and we ended up in a chat group together, and that's where I got to hear the real story. So Tim, tell us, how'd we meet?
Yeah, so we just reconnected, like you said, at the conference here recently, and we all were put in a room together and just had a minute to share our story. And I had to quickly tell you about how we had met the first time. It was probably 5 or 6 years ago at one of your meetups that you had held. And that was really the first thing that got me thinking about multifamily, because the speaker you had was on taxes, and he was a CPA, and I don't even remember his name, to be honest, and I don't remember anything he said about taxes. That was 5 years ago. But the one thing that he said that really stood out to me was kind of a offhanded comment he made. He said that his in-laws owned 64 fully paid off units, and that they had it fully property managed, and so it was completely passive, and it brought in $15,000 a month for them. And my first thought was, that's not right. That can't be right, you know. And on my way home, I was driving thinking about that. And I thought, that doesn't seem right to me. So I went home and I kind of did the numbers. I went through and made a spreadsheet of what the typical rents might be and expenses. And I realized that not only, if the building is paid off, not only is that achievable, but it's actually fairly conservative. So that was really the thing that changed my mind. I had been doing some other things, trying to do some flips and things, but that's when I kind of changed my mind to, hey, this multifamily thing, there's real opportunity there. And so it was at your meetup. So I still look back and think about that minute, that conversation. And so thank you for having that meetup, because I think that's a part of my story.
See, I love that, Tim, because that's why I do these even live streams. And you people who are here today, you know, all you need is that nugget, that one little nugget got your brain churning, and it changed your path.
Yes, absolutely.
What a sweet story. I was like, wow. I really did make a difference. That's what I got. So, you, before real estate investing, you were in IT, or are you still?
Yep, I'm still. That's my day job. I'm an IT manager, so that's probably the highest and best use of my time, at least for now. And I enjoy doing that. There's some people that what drives them is they want to get out of their day job because they hate it. But I really enjoy what I do, and so plan on continuing doing that. But real estate is kind of my passion, and so I try and balance both things.
Well, and you're going after that goal, those numbers you figured out. You must be an engineering type of a brain. Usually
Yeah.
IT guys are. And that right away, you went to those numbers. Now, wait a minute, I got to map this out. How's this going to work for me?
Yeah. Yep. I'm not great at the creative side. I'm not great at the construction side. Really, my strength is in the numbers and understanding the numbers behind the deal and analysis. Looked at quite a few different, before I pull a trigger on a property, I really feel like I need to understand the numbers, and I think that's where my strength is.
Okay, I have just a little semantic here, folks. Wait a minute, my chat box isn't up. Why is that? I just want you to get your chat box up. Uh-oh. Hang on. Here, I lost my cancel. Okay, I'm back. I lost my place where I'm getting my chat box. Okay, here we go. I gotta be able, okay, so here's the thing, folks, in the chat box over there, that's where somebody, mine is working. Okay, Aaron's chat box is working, that's great. Why is, mine's working, there it came, okay. Now I see it, great. Because that's what we need. You need your chat box over on the right-hand side so that you can, I can see who's asking a question, and that's how I'm going to be able to address Tim with the question. Then I have one more thing I want to do real quick. I'm going to do a poll, and it's coming up right now. And here you get to vote. Can you see it? Somebody say, yeah. Okay, Tim sees it. On this poll, you just make a vote there. Where are you in real estate investing? So we want to really gear this to who we're talking to. So people are voting here. Are you getting started? Are you a fix and flip, a wholesale, buy and hold? Right now, buy and hold's kind of winning. Or scaling a portfolio, it's right at the bottom. That's getting up there too. So people are voting, and this just helps us see, and I'll show what the result, it's still changing. This is just great information. Right here, that little chart, there's a lot of ways to make money in real estate, isn't there? Right on my little chart. Okay, I'm gonna end the poll now, and let's see what the result is. Here we go. Buy and hold is the winners. Can you guys, share results. There you go. Can you see it?
Yep.
So buy and hold, and that scaling is coming in second hand. So good. The people here today, they are wanting to know, now is the poll off? Everybody? You can see Tim now and me. All right, great. So we're going to get started now, and you go ahead and put your questions in, and I'll weave them into the conversation as we go. So I want to hear about that very first property you ever bought, which was a single family rental, right?
Yep, that's right. So I had talked to a construction friend of mine, and we had decided that we'd try and do a few flips together. So we bought actually 3 houses within a short period of time that we fixed and flipped. But that very first house I kept as a rental. And so I bought it for $87,000 was the price. It was a bank short sale. And when I got that and fixed it up, he talked me into renting that. My original thought was just to sell it, but turned it into a rental and rented it out. My first couple tenants were not great, and that's my own fault for that, because I knew about the standards that you should have for tenants, and but when the people came to see it, they all had good reasons why they didn't quite meet those, and I'm a nice guy, and I listened to that, and it's like, okay, well, you can't show 3 times the rent of your income, so, but you have an explanation. You just start a new job, or you get cash on the side, or whatever, or you can't give me a reference from your previous landlord, but there's a good reason for that. Well, I quickly learned that, and actually I gave it up, and my wife started doing it after that, because my first 2 tenants were troublesome. So she is much better at that than I am, and was able to get good tenants in there. And so that was my first house. That was in 2014. And again, I was really focused at the time on fixing and flipping. That first one went pretty well. And after that, I did one that was kind of break even. And then my third one, I lost money. And I thought, I'm not probably the great, this isn't exactly the right thing for me. And that's about the time I went to your meetup, and I thought, now that is the thing I need to be focused on, the multifamily, once I could see that vision, and that's gone a lot better. But that first house was pivotal. It felt like so much money when I wrote out that check for $87,000. But looking back now, it seems like that was a no-brainer step. But I really wondered at the time, is this the right thing to be doing? But
so did you not have a mortgage on that first one? You paid?
The first one, yeah, I paid for in cash. I had taken one of the first steps, and I think is important. I'd recommend to everybody is the financial discipline of living beneath your means. And for me, that meant paying off my house early. That was kind of what my original focus was. And so I was able to pay off my house and then take a home equity line of credit on the equity in my house. So that was,
so you did have a mortgage. That $87,000 came from your house.
Correct. Yep, that's right. Yep.
Yeah. But what a great way, because exactly, that is a way to leverage. That's what that's about.
Absolutely. Yep.
Leverage. Yep. That's step one. You bet it. Okay. And I'm so happy you said that, you being the one interviewing the tenants, it's not good. It doesn't fit with your personality. You fell for stories, and this is common for a first time investor, and then it didn't work out so well.
Right. But the lessons were very valuable. It's learning by failing, I think, can be a bad thing, or it can be a really good thing, in that message gets buried in my mind of, okay, there's going to be rules, and they get stuck to the rules.
Yeah, you see, you don't break your rules around that type of thing. Yeah, no references, or you can't call the last landlord. Uh-oh, red flag, folks.
Right, yeah.
Big red flag.
Right.
Okay, so then, one of my questions, let's see, when did you then decide to grow? So you got that house, you show up at the meeting, now you're like, wait a minute, restructure, right?
Yeah, yep, absolutely. But I wasn't sure how to get to that next level, from having just one single home. And what does multifamily investing really look like? And while I was pondering that, the timing was just wonderful, in that the little town 4 miles away from me, the owner of a 18-unit apartment building put a sign out in front of the house that says apartment building for sale. And I saw that, and I thought, this could be something. So I got talking to the owner. He was really a salt of the earth kind of fellow, and he had done all the repairs. It was an old schoolhouse built in 1920 that they had converted into apartments. And so kind of a cool old building, and but it had a lot of character to it. And anyway, so he kind of showed me around and showed me things, and we negotiated a price, and so we're able to get started on the road to multifamily. So it was.
So you were able then to, did you get some seller financing in that? I mean,
We talked about that. He really didn't want to do
okay.
that. So I tried to negotiate that into it, but was not able to. But thankfully, I had room left on my line of credit, and I was able to use that rental house as leverage, and able to take out some equity that I already had in that, and with those two things together, was able to meet the $900,000 down payment, which is 20% of that was what the piece I had to come up with there. So I was able to do traditional bank financing on that.
See, and that's a lot, 180 grand. We don't have that laying around, but you had it in leverage.
Yes.
That is so cool. So that one original house was darn smart in the end, right?
Yeah. Yep. Yeah. It was kind of pivotal, you know. And also, before the bank was going to lend me the money, they wanted to see that I had a little experience being a landlord, and so I could point to that house. So that was critical in a number of ways.
Yes, that is. On a commercial loan, they want to see experience.
Yep.
Definitely.
Exactly.
So you got the old schoolhouse then, was that like a year later or something?
So that was the very end of 2015. So coming up on the 5-year anniversary of owning that property. So
now all of a sudden though, you went from overnight from 1 to 18.
Right.
Uh-oh.
I remember talking to my wife, and I said, this can't not work, you know, because you're putting all the chips into this, and so it's like, we have to find a way to make this work. And the other thing I said is that I didn't want to do the maintenance on the building. I know myself, and if I have to, you know, the proverbial fix toilets and do all that kind of maintenance, I'm going to end up hating it. So even though it was a commitment, we ended up getting all of the maintenance done by a local handyman, and that was the best decision, because the thing that would have made it not work is if I ended up spending all my weekends there working on project and fixing up the building until I said, I hate this, I don't want to do it anymore, and then ended up selling it after a year or two. That would have been a failure. So having the discipline to hire a handyman, even though it was a cost, I think was important for me.
Well, and remember, you're working full time too. You know, right. It's not like because that can turn into a part-time job. And like you said, then you're not there for the family. I've heard the story many times.
Yep.
So good for you. So you figured it out, and obviously you found a good handyman, right?
Yes. Yeah. He's great. Does a good job for us.
You still use him?
Yeah, still do.
Now that's a great story. We're talking 5 years later and you're still using the guy. So that really means he is on the ball. Definitely.
Yep, it worked out perfectly. He was just starting his handyman business, and we found out about it through a mutual connection. And so yeah, we've been able to really get him started with a lot of projects in the beginning. So yeah, it's been a good. Now he treats us right because we were his first
absolutely.
client.
Now I do have a question from someone, and they say, this is in the Q&A section. I see it here. If you don't have much to put down on a property, what's the best financing option?
So you could look at doing owner carryback, seller financing. That is one option. Another option would be to partner with somebody else that maybe they have money and you have more time in the deal. And so there's a few ways. If you don't have a lot of your own money, I feel like a lot of times you'll get the best financing, but not always. I guess if you can work with a seller on seller financing, that might be an option.
Sometimes, though, just to answer Michael's question, seller financing is cost more sometimes. I mean, there's the advantage, but the seller will charge you a higher interest rate because they can, like, especially take today. If you can qualify, you can go to the bank. Well, on a commercial, you're somewhere near 5, right? But on, seller financing, they might want more.
Yep, that's true. Yep. Yeah,
But
they feel like it's, but if it's the difference between doing a deal and not doing a deal, then it might make sense.
well, you're talking to a lady who, I did a lot of real estate when the interest rate was 18% and never, it doesn't matter. So people today, interest is nothing compared
Right.
to, it was all about cash flow, and it still is.
Yep, absolutely. Yep.
Yeah, no matter what the interest rate, all the numbers have to work together. So, when I like what you said at the beginning, managing to save all that money really had to do with living a little bit frugal there, knowing, hey, this is a nest egg we got to put together to get this rolling.
Right. And I think it doesn't seem like that much of a sacrifice if you, as you get raises, just not incrementing up your style of living at the same pace. If you focus on it doesn't seem like a sacrifice if you're kind of used to that level of living. If you have money taken out automatically, or we did a 15-year mortgage instead of doing a 30-year mortgage, and that costs a little more every month, but we didn't even think about it because it came right out of our check. So then we had the house paid off, and then we're able to leverage that equity.
Yeah, I totally get it. Yeah. So, and again, like you say, sometimes you get a raise and oh, let's get a bigger house, but you put that off till later, till you get this foundation set up. Then later you can have your bigger house or whatever it is. Exactly. So, what would you call smart investing then? What you're talking about is smart investing. Tell me what that would be for you.
Smart investing, I think, is just using the assets that you have and leveraging it. So I followed Dave Ramsey when we were first married, and he talks a lot about frugal living beneath your means, saving, and I think that was critical. But also Robert Kiyosaki talks more about leveraging money and using the bank's money so that you can buy more. So I think there's a season for both. I think there's definitely a time to not take on more debt than you can afford and to live frugally. But then there's also a time to say, here's an opportunity, and to go after that. Also, I think a piece of smart investing is being smart in what you invest in. And since I'm a numbers guy, I think more about the deal analysis and running the numbers on 20 properties or 50 or 100, so that okay, this is what the expenses are, this is what the income I can expect, real world scenarios, so that when a good deal comes up, it instinctively. And I feel like if you can go for the best 10% of a deal or the best 2%, of all the deals, these two are the very best, so I'm going to go after these, then I feel like your odds of success are a lot better. So
I would totally agree with you. And one of the things I teach in my proven profit formula is how to tell a good deal from a bad deal. And it's all about the cold, hard math. Yep. You nailed it. It is. And once you have the right spreadsheets and understand that, like me, I'm skilled enough now at it. I know I can look on the MLS and go, oh, that's bad one. I don't even have to run numbers. I just know them.
Right.
If they work or not. And then, okay, you get a little deeper and you put all the numbers in. But yeah, it's definitely a numbers thing. So if you could sort it out, what was the blessings in those first investments? Because now you have an 18 unit. You got that house still, right? Plus the 18 unit. What was the blessings of all that?
So I think really the knowledge and the experience that I learned, and also the ability to exercise the risk muscle, because like I said, buying that first house was really scary, and but if I hadn't done that, I think the learning to exercise that risk muscle is, I don't know, I think it's critical. And I don't know if that answers your question. Sorry.
Well, no, I think you did, because that risk muscle, I know tons of people who show up, analyze, but never pull the trigger. You've got to buy something to learn, like you said.
Yep.
And then that was a huge leap to the 18, but you learned a ton of things on the 18 unit, I bet.
Absolutely. Yep. Sure did. We property managed for the first 3 years. We managed that ourselves, and which I'm glad we did. I'm glad we're not doing it anymore because it was a lot of work. But the lessons that we learned during that, I think, were crucial. And if we hadn't done that, I don't think we would be as good at recognizing a good deal and some of the potential pitfalls.
Yeah, I agree. And, you know, even if you hire property management, this is another thing I teach. You have to manage your property managers.
Absolutely.
And as you grow, you definitely have to manage them to make sure that they're carrying out your mission of how you would do it.
Absolutely. Yeah.
Yeah.
I'm still very involved, even though we have all of our properties property managed by a great property management company. I still am very involved in everything that's going on, and know if there's issues, I know about them. I know the tenants, some of them anyway, and I know what's going on with them. So that, because if you don't do that, then that's, I don't know, it's just a recipe for trouble.
It is. There's some folks here asking us, like, how did you come up with a price for that multifamily? Well, obviously the owner wanted that number.
Yep. He wanted a certain price. And but we negotiated. So I ran my own numbers, you know, and understood where it needed to be in order for it to be a good deal for me. So it was kind of, he had his number, I had my number, and there was kind of a negotiation in there.
And did you do all that without an agent?
Yeah. So he didn't have a broker. He had listed the property previously with a broker, but didn't get any interest, and he's a thrifty fellow and didn't like the idea of having to pay for a broker. So I don't know, I feel like that benefited me, because I feel like we were able to come up. I didn't have any competition other than the folks that happened to drive by that road and see his little sign out in front of apartment building for sale. So, but
not a lot of people. Lots of people may have seen the sign, but not everybody can execute on coming up with $180,000 somehow.
Yep. Yes,
yeah,
absolutely.
Totally. I get that. So really, you hashed it out with him and came to an agreement, and you knew where to get your money because you had been thrifty and saved it.
Yep. And he and I had a good relationship still, and he was really nice about, like, helping me with things through the years and watch out for this. And so he was kind of a mentor to me, which is important. If you can keep that relationship, that's maybe a piece of advice with the previous building owner, especially, I mean, if it's a passive owner, then it's going to be less important. But if it's a really hands-on situation, he was looking to retire, and he was a really good resource for me in learning the property management trade, I guess.
Okay, and this was in a small town, you said?
Yeah, Clear Lake, Minnesota, population under 700.
Wow. Okay, and so do you still have that building?
Still have it. Yep, I think I always will.
So it's turned out to be a great investment.
Yep, yeah, it's been good, and it's good people, really good tenants, and yeah, so I think I'm going to hold on to that one.
You know, I really like what you say because, you know, a lot of people here are investors in the metro area. And see, there's a small town, and I recently helped a client, and we're in a small town. You know,
Yeah.
11 units in a small town, but you know what? It's close enough to the big town.
That's right. If people can drive, then and even if they can't, I suppose there's a demand. But yeah, it's just understanding who your tenants are and where they're working is probably important.
Yeah, exactly. So, you know, do you have a high vacancy then on a building like that, or?
It's like, honestly, we've had, I think, 3 months in the last 5 years where we've had one single unit vacant. It's a very strong demand. When one is vacant, another one, you know, I have a list of people that are interested in renting there. So.
Wow, that's great. That's great. And how about, I have to ask, because you're a landlord, you have even more than those 18, and how has COVID affected your vacancy rate or what's happening?
Yeah, vacancy has been really, really low. The one I bought a building this past March, and so we kind of changed it from student rentals to family rentals. So for that building, we basically, the students moved out, and then we had to fill it up again with families. So that took a little while, I think, especially because we were dealing with COVID at the time. People weren't as likely to move, but yeah, vacancies are always very low for me. I've been fortunate in that.
Would you say your rents are market rate?
Yeah. Yep. 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 Yeah. Maybe just slightly under market on some of them, but I would say that they are. You know, you can chase that premium rent, but sometimes if it comes at the cost of a quality of tenant, that can be. I don't know, that's a expensive trade-off there.
It is. It is. Okay, so let's see here. Is it true for you that there's always a good deal out there? Now you can lead us into what happened after the 18 because you bought something else.
Yeah. Yep. My next property was a 20 unit, and so that was in 2018. We purchased that. It was kind of an odd thing. It was not listed on LoopNet or with a broker. It was listed on the MLS. Normally, you would never see commercial property listed on MLS, but I don't know if I think the broker didn't want to pay. I don't really know what the situation was, but that's how I first found out about it and got in touch with, I'm not sure if he was a discount broker or what the situation was, but anyway, it was listed through a broker. It just was not well advertised. Maybe I'll put it that way.
You know, did you know that, I'll just speak because I'm a realtor, obviously. You can go to these places where they'll put it on the MLS, but that's all they do. So
Right.
It sounds like it was one of those. So it's out there exposed, but it wasn't marketed.
Right. Yep.
Big difference.
Exactly.
Yeah.
Yep. And so that was a 20 unit, and I met and toured that, and the numbers seemed to make sense. And so yeah, put an offer in August of 2018. So and that's when I started property manager. So it's in that area, it was a little bit tougher tenant maybe, and I didn't want to have my wife dealing with that, so that's why we ended up bringing on the property management company.
And now that was in, you know, like, did you have enough money from the 18 unit and all that to spring on the 20, or?
Actually, again, yeah, it came back to that first rental house that I had bought. So I realized that the market had appreciated.
Oh.
So that house that I bought for $87,000, I sold for $187,000. So I got a $100,000 profit. You know, so I'm so glad I didn't do a fix and flip for a quick little on that property, because it ended up really being the difference for me being able to get both of the multifamily buildings. And so that appreciation, it was really weird to me to think of that much appreciation in only 4 years that I owned it. It was like, you know, I rented for $1,200 a month, but every month it appreciated for almost $2,000. So it was as if somebody was paying me extra money every month just to own that property. So really blessed, I think. And part of that is you're not always going to see that. It was, I got a little bit lucky, honestly, in that timing. But we kept it up, and I think if you're in the market, a lot of 4-year periods, the market appreciates well. So
I would agree with you, and I know I've helped lots of people who do that and have that's worked for them. Like you said, that initial property has appreciated enough to turn. That's how one of my methods. I rehabbed. We took condemned fourplexes and rehabbed them. Then we refied, got the cash out for starters, paid back all, and and then rented them all that time. But that appreciation was still sitting there, waiting for when we were moving up to bigger multifamily.
Yeah.
And that worked over and over because we did those condemned buildings, a lot of them. Nice. That's how we got 100 units.
Yeah, well.
Yeah, so that's brilliant. And I love that you say that. That first house was a super blessing in the end.
Yeah, yep, absolutely was. It was pivotal.
Yeah, and it gave you the money. Now you got this new 21 unit?
The 20 unit, so 18
20,
plus
yeah,
20.
18 and 20. Now we got 38. Now what happens?
Yeah, so in that time frame, my wife started doing Airbnb. So we bought an inexpensive house in St. Cloud near the hospital that we started Airbnb-ing, and then we also changed a few of our units to be Airbnb units where people could come, and that was really a good strategy because it enabled us to get more money every month. It's more work, but she had a little more bandwidth now that she's not managing the properties, so she kind of focuses on the Airbnb side of things, and that way, it's usually like traveling workers is kind of been our demographic that we've tried to focus on, and there's a lot of it. You wouldn't think St. Cloud, Minnesota would be a huge market for Airbnb, but there's enough people that are in town, and we've been really fortunate with the traveling nurses that there's been a huge demand for traveling nurses right now, and as well as other kind of blue collar people that it's been a fun thing for us to work on. So that's we picked up another house around that time frame to focus on Airbnb.
See, now you're a pretty savvy investor. I mean, you wouldn't be where you are if you weren't, but you're mixing strategies, and that's another thing I teach. When you can mix strategies, a lot of times one can help when one isn't going so great. So it's a nice way to diversify, but you're in the same wheelhouse.
Yep.
Yeah, that's great. Airbnbs in St. Cloud, who would have thought? But
right.
Yeah, you nailed it. And they don't have to be fabulous. They're for business workers, right? They do the job.
And for them, the prospect of getting a house for $100 a night where a hotel room would cost that, they love it because they've got a whole, kitchen to cook in, and they've got a living room, and they've got a washer and dryer, versus a hotel room. That's our competition. And so we've been able to keep those very full.
Wow. And I would think COVID, if it's nurses, it's
right. Yeah. Yep. At the beginning, there was some people that were set to close on their houses, but then the closing got pushed out. So they needed, at the beginning of COVID, and lately it's been a lot of traveling nurses. So
that's really great. Okay. So I believe buy and hold is the ultimate path to that passive income. Do you?
Absolutely. Yeah, it's fun. Being a numbers guy, I kind of track my finances, and it's interesting to see, when there's cash flow, it improves every month, and then also they're paying down that large, yeah. So kind of you're getting it on both ends. So it's I definitely agree that it's the best way to build long-term wealth.
Okay, so now though we got another building because we only have 38.
Right.
What happened?
Yep. So I had 38, bought the house for Airbnb was 39. And then in March, St. Cloud State university has been declining enrollment in the last number of years. And so a lot of owners who had been focused on student rentals have seen their students kind of drying up, and there's a competition for a shrinking pool of students. And so they've always only ever done student rentals, and it's kind of been a race to the bottom on rents for student housing. So a few properties have come up for sale recently, and so that's where I was able to buy the 15 unit in March and then convert that from student housing to families.
Okay, so there's another thing I hear you saying about being astute. You're watching the demographics of your particular market. There's another thing I teach, because you have to watch what the rhythm is. And like you say, if the enrollment at the college is going down, there's exactly, don't keep them as student housing, then convert them.
Right. Yeah.
You're ahead of the curve is what I'm hearing.
Oh, thank you. Yeah.
And now here you are, you got 15 units, and it took a little bit, but you converted them over now.
Yes. Yep. And so the rents we can get as renting to families are a lot better than what you can get renting to students. So
more money. It's really interesting because I don't know if he's on here today, but one of the people I work with, he loves student housing because you can rent by the room and he gets more.
Yeah. Yep. I suppose it depends on your market. At one time, I think student housing was definitely more lucrative, but because of the shrinking enrollment of the university, it's ended up not being a good thing.
And I would think, just if we talk generally, even nationally, because there's people from all over on here, student housing could be trickier right now because guess what? People are at home. College kids are doing their studies from home right now.
Right. Yep.
Okay. And then, so basically, one other thing about you, mostly you've kind of found your other deals because you knew where to look. It's not like you had some realtor who just dropped them in your lap, right?
Correct. No.
Doesn't quite work like that. So do you work with realtors or you're going straight to sellers?
So I've tried to, I worked with realtors back when I was doing the flips, and I've tried to make myself known to brokers. And this last deal actually was through a broker. Yeah. And so I've tried to develop those relationships and make those connections. And I want to be a person that, doesn't overpromise, because I think if your reputation is super critical and very important to be a man of your word, a person of your word, and the brokers will get to know your reputation. So I've tried to develop those good relationships with the brokers so that they think of me, and especially communicate with, hey, this is what I'm looking for, so that if something comes up, that they think of me and I'm their first call.
Since we're talking about that, Tim, you'd be surprised how many deals that I've brokered that they're not quite really, they maybe just hit the market. Or I know I sold a 12 unit apartment building. And yeah, you know what? We were there looking at a different building and then just said, oh, by the way, you got any more? Oh, I got one coming next week. Well, boom, wow. We went and got it.
Wow, wonderful.
So those relationships are pretty critical.
Yeah. Lately, what I've been doing though is I developed I went online and I was able to get a listing of every multifamily property in the St. Cloud area. So there was 450 different multifamilies of 5 units or more. And so I got a list of the address and the LLC owner and the number of units. And then so I looked up online, I was able to find out who the person is that owned the LLC. And then I did that for the entire list. So then I could find out who owns the most units. And so then I just started calling people on the list, and mostly to network, because I think a big part of success is mindset. I mean, part of it is knowledge, but a big part of it is mindset. And if you surround yourself with people that are thinking differently, some of that starts to rub off. And understanding what are they doing that is working or not working. That networking was a very important piece to me. And then the other thing I would just mention, so are you thinking of the future? Are you thinking of buying or selling or just holding what you have? And so I got like to the 5th different owner after a nice conversation. He said, oh, I've been thinking about selling. So so that's who I'm having some conversations with now.
Oh, totally. That was gold, everybody listening. He just told us some gold there, just so you caught that, to make those relationships. But I think out of calling those, didn't you rustle up something?
Yeah, yep. So I've got, so I'm talking with I'd hope to have it, we've had a few offers and a few discussions. So there would be either 1 or 2 buildings that I'm looking at purchasing it. But the thing that made me smile is one of them is a 10 unit. And I thought, wouldn't that be, that would put me exactly at 64. Thinking back to the tax person that you had at your meetup that talked about 64 paid off units, I thought, oh, that would be really nice to be right there. So a little premature maybe, but I'm hopeful to have something soon.
And, then I remember, let's go back to that first night when you were driving home and figured that all out and everything. And you said it was them making $15,000 a month was conservative. And that was 5 years ago. And I know who it was, Scott Callahan, the accountant I had speaking, just so you know. And yes, he's owned lots of property as his in-laws do. And so is that a good number today? Like if we really looked at 64 units, you probably have this figured out. Is 15,000 good or no?
Well, so I think over time, I mean, I don't make anywhere near that right now in cash flow because of a few reasons. One is I owe money, and so it's going to pay down the mortgage. But eventually when they're paid off, I hope so. I would expect that would be kind of a conservative number at that point. I would expect because rents go up over time, and so I would think so.
But the good news is, in 20 years or whatever the year is, it will be totally passive in the sense of, and you'll have property managers and
Yep.
And you'll be one of the people they call and you'll be ready to sell.
Maybe.
So, what's the worst thing that happened while you were building all this?
Probably the worst thing that happened was I had bought those 3 initial houses, and one of the things that I had done back then was I had taken out a loan for my 401k, and then I lost my job, so I owned my own house and then 3 other houses that we were trying to rehab, and then our company had the company I worked for then had a downsizing, and so then I had a limited amount of time. I had to pay back my 401k loan, and then I owned had all these mortgages, and so but you know, it was a bad thing. It kept me up at night sometimes, but it all worked out. You know, I was able to sell a couple of the other two houses, and was able to pay back the 401k loan, and I was able to get another job, and so it all worked out fine. But there was a little bit of adversity there when kind of a few things all went wrong that wasn't really on my radar.
You know, the more skilled we get at this, because that happened to me, actually buying the place I live in now, in the moment, I ended up needing a bridge loan between selling that and buying this. And I was like, oh no, but then I just gave them the right pre-approval. I didn't really have pre-approval, but I gave them a letter I had cash because I had someone, you know, in line, my brother, but he was never going to buy it for me. I had to figure it out, and I just knew I had to fill the gap. But then I thought, come on, I teach this. Just start making phone calls, and I did, and it easily came together and it worked out really great. But at first, I was like, oh no, but I know I can solve this.
Yes, yep. And the more you network, and the more you, I don't know. There's a lot of creative ways to solve problems. There
is in real estate, a lot of creative financing ways. So absolutely. So what's the biggest secret you have for those listening today that especially these people we have, you know, they're wanting to get started? What's the biggest secret?
I don't know. I think, just doing it, you know, getting out of your comfort zone, and just taking that step. You know, there's a lot of people that go to meetups where you talk to them and you'll find out that their next deal will be their first deal, and maybe that first deal never happens because they're unsure. But getting over that fear, and that, you know, if I hadn't taken that first step, I wouldn't be where I'd be focused on the 9 to 5, and so it was all about me getting over that risk, getting over that hump, and being able to take action.
Yeah, it is about that action, and what you said way back, really that risk muscle. And don't do anything stupid, not stupid risk. I'm talking, right. There's calculated risks here in real estate. And the more you understand the numbers, you can make a calculated chess move. I say, this is like a chess game, guys. You just have to do things in the right sequence, and mixing strategies is another way to mitigate risk. That's a good one. So, is your goal to live off the passive income then when you retire, whenever that may be?
Yeah, so I would like to have the ability to do that. I think I'll probably work in IT for the foreseeable future. I really love my coworkers, and I would miss that if I didn't do that anymore. But having the ability to do that, it was 2 years ago that I thought, I wonder when I could be at the point where I could retire if I wanted to. And I thought maybe in 3 years, so that would be a year from now. And I don't think I would quite make it, but what I did, I bought, coincidentally, I bought a bunch of razors on Amazon, and I thought, I got a whole bunch. And I thought, I wonder if these would last me for 3 years, the 3-year time frame. All that said to say, every morning when I'm shaving, I think it's a little reminder to me of, okay, I had that 3-year goal, and am I gonna be able to retire without buying more razors? It's a silly thing, but it's more of a reminder every day that you have a goal. And to me, looking for deals isn't like, if I had 100 hours to spend on looking for a real estate deal, that wouldn't be super productive. It's more about spending, maybe a couple hours a week doing it over a long period of time, So it's a little reminder to me of this is your goal and this is the direction you're going. So
Now, I love that too, because I think we all need reminders just like that. Something like in my bathroom, I have a collage I made. Actually, and it's framed and it's hanging right there, and I'll be brushing my teeth and I am over there on my vision board, you know, every day bringing that in, just like you with your razor. You know, I'm going to keep this sharp, this real
right.
estate stuff. And now I know you had a couple buildings on the market. Did they sell?
Yeah, so I put them on the market and I got a couple offers. They were just a little bit under what I was asking, so I decided to hold on to those. So I haven't sold those, but
Okay, but you're going to keep them then, or?
yeah. They had appreciated quite a bit from what I had paid, and so I thought of maybe selling them, kind of test the market a little bit to see if I could do a 1031 exchange into something else.
Yeah, but now right now you're content with them, and you'll see what happens.
Yeah,
and
I'm gonna hold on to them for now.
Yep. And you know what? That's not a bad idea too, because you never know right now here in the Twin Cities. And I can speak for this because I just listed for some investors over the last couple of months. I think we did 20 something units, but in 3 or 4 different buildings, and they all blew our numbers over.
Wow.
Multiple offers.
Great.
And, you know,
Wonderful.
Yeah.
Yeah,
so
that's perfect.
The market is hotter here than it is there, but
That's true.
You have to, you know, the value is what the market will bear. Don't ever forget that, folks.
Yep. Yeah.
Yeah, so I love that. Thank you so much, Tim, for all this knowledge. Anybody got a last minute question here? Because I am going to give you a contact email for Tim. Somebody asked. Anybody out there? Okay, here comes a question. Oh, they like the razor. Yeah, your 3-year goal. Oh, there's some more questions over here. No, I think I answered those, Jeannie. Oh no, here we go. Have you seen appreciation rates for multifamily aligned to those of residential? Good question.
Yeah, very good question. It feels like residential has really appreciated a lot, at least in this area. That's actually, we didn't talk about, that's how I bought my last 15 unit though, was I saw that multifamily rates were appreciating. So I was able to take out a loan on the equity I had. They were able to do it. The bank was able to do an appraisal and realize, okay, it's appreciated about 15 or 20%. So I was able to take out an equity loan on that first. So yeah, it used to be the
old schoolhouse, right?
Yep, exactly. And so yeah, it used to be you could buy properties in my market. You could quite often see them for about $50,000 a unit, and now it's typically, you know, $65,000 or $70,000. So we have seen appreciation in multifamily.
That's great. And so to answer your question, Kenneth, yes, multifamily is appreciating, but I would say residential may be higher. It's pretty amazing. That's why it's a great time to sell, and COVID has not affected that. And the reason is we have low inventory, you know, pretty much everywhere. There is one more question here. What are the best ways to find partners if you had 50 to 80,000 but no multifamily experience?
Yeah, I think meetups are a great way. Just like that conference that we were at, LeAnn, we had opportunities to network with other investors. And also the forums like this, I think, are a great way to meet other people that are interested and like-minded and want to get into real estate. So I think that's a key way.
Yeah, you know, that leads me into my next. I do, you know, the people here are part of the LeAnn Riley Real Estate Investing Club, is how you get invited to all these webinars. So I just want to remind you right here, I'm going to share a slide. This is how you join that. I actually have a Facebook group. Okay, and this would be a good way to network and meet some other people. Can you see that? That you can just go to LeAnn Riley's Investing Club Facebook group. That's where you can interact every day with different people, ask your questions. There's a lot of other multifamily or investors on there. So that's one way you can start to interact. It's sort of a online Facebook meetup. The other thing I also want to tell you about right here, I'm going to throw up the slide that is, here is Tim's contact email. If you had a question or something, that would be the best way to contact Tim. So take a look at that. And then I'm going to put up one more slide. And what that is, whoops. Right here, you can schedule a free strategy session with me to talk about real estate investing, or if you want me to help, I have agents and a team, and you can go actually on my website under the real estate part, you can find it, or that's the link, LeAnn Riley, Buy, Sell, Invest, and that will give you actually my calendar, and you can schedule some time to chat. Okay. And then I'm going back to Tim here. Oh, good. Jeannie is my trusted assistant on the side. You guys can't see, but she put this all in the chat group so you can just push the link. Thank you, Jeannie. And Tim, just thank you so much. You were really insightful, and it's so interesting that, you know, you're out there doing this, because we do share the mindset, and it is this mindset that I have seen makes and breaks real estate investors. And nowadays with COVID, boy, we have to work on our mindset, don't we? Because
absolutely.
Everybody's life has changed, and how you be, I call it, which is our mindset, how you handle being alone. I mean, I live alone. It's been a whole, you know, I already liked being alone, but now it's a lot of alone. But, you know, thank goodness for Zoom and everything. And I'm out in the world anyway, in the sense of all of our technology. And I like what you said, you still enjoy your IT job and the people you work with. And, you know, you got to figure out and do what you love. And I really can see you found your lane. And what the other great thing is, your spouse is in the boat with you.
Absolutely.
You're both in this paddling, and, you know, you're going to have a nice retirement doing what you love.
Yeah. And I wanted to say thank you so much to you for what you've done with the meetups and the opportunities to connect with people. You know, you had no idea until the other day that your meetup had an impact on me, and you probably won't know how many people watch your videos or things online. But thank you so much for what you do, because I think it might be just the kickstart that somebody needed to get going.
I really appreciate that. You know, I really do, because like I said, I was so surprised. You know, I may try that same webinar platform. I think I have to go up one step so that people can, that 2 or 3 minutes in a small group. It's surprising. I think there was a gentleman from Texas in the group we were in at the same time. But hey, there's ways we can meet people during COVID. What the heck, right?
Mm-hmm.
So thank you so much for the generosity of just sharing how this happened. And wow, you know, I'm pretty impressed. So
thanks again, and so fun to chat, and look forward to watching your next webinars.
Yeah, and I'm sure we'll meet again, Tim.
Sounds good.
Thank you. Bye-bye, everybody. And, you know, you'll get the email, so we'll see you next time.